Hi, welcome to the channel. Today we're going to talk about how to ship goods to Canada for commercial use. Before we go ahead, remember to subscribe to our channel, leave a like and a comment if you enjoyed this video. Moving forward with our topic, today we're going to talk about how to ship goods to Canada for commercial purposes. What do I mean by that? If you want to actually import stocks into a warehouse in Canada and then sell them locally. So let's run through a checklist on things you need to keep in mind before shipping and importing to Canada for commercial purposes. First of all, obtain a business number for import-export. Specifically for an import-export account that can be actually obtained in minutes. Second, check whether you need a custom broker. Most likely, if you're importing anything above 3,300 Canadian dollars, that's formal clearance, which means you most likely need a broker. Who is a broker? A broker is someone that can help you handling the custom clearance, paying for duties and taxes, filing documents, and keeping records. Then you should determine the origin of your product and see if actually there's an FTA, free trade agreement, that applies to your products and to your country of origin. Now, what can be a proof of origin? A proof of origin can also be a commercial invoice. So generally in the commercial invoice you state the receiver, duties, taxes, the total amount, the declared value of the product, the custom description, and so on. But you also state the country of origin, the country of manufacture to be more specific. So in many cases it's okay to just have it declared on the commercial invoice, but in also as many cases it's not enough to have it only on the commercial invoice. You need to have a certificate of origin, which is something that you need to formally apply to. Then number 4, make sure you can actually import your goods. There are some restrictions in Canada, like for liquids or plants, seeds, for example, so you need to be careful, especially for baby products as well. But there are also some prohibitions like firearms, drugs, overall narcotics, and so on, which is pretty much common sense. Then you need to think about classifying your goods. Before actually applying a tariff and paying duties and taxes, you need to understand what you're importing, right? So you need to understand your products and what's the HS code. Now be careful because worldwide the common categories and headings are actually 6 digits pretty much. So it's an HS code of 6 digits, but in Canada they're 10. So the first 6 are common worldwide, and then we have additional 4 digits that are basically identify subheadings and sub-subheadings. So just make sure you check your HS codes and you don't only declare based on the 6 digits HS codes, you do it on a 10-digit base. Then we have number 6, taxes. It's not VAT, value added tax, but it's actually goods and services tax, so GST, that applies in Canada, which is 5%. So anytime you import something, there's always a 5% of tax that you need to pay on top of the duties. But other than that, you actually need to pay, provincial tax, most likely, except for a few provinces where they have 0 PST, provincial sales tax, and other may have, for example, 8% or 10% and so on. So be careful, think about the provincial tax and the sales tax, the general sales tax, goods and service tax. So there are 2 basically. Also, how do you actually identify the custom value and the declared value of your product? So the general rule for Canada is that duties apply on the FOB value, other than compared to other countries where you generally have the chief value, cost or product, let's say value plus insurance plus shipping fee. In this case, Canada will apply duty percentages and tariffs basically on the free on-board value, which means the intrinsic value of the product, how much you declare it for. If you declare it for $100, then you're going to pay duties on $100, and then for the GST, it's going to be calculated on the FOB value plus the duties. So if you pay 100, if your product value, the FOB value is $100 and your duties are $10, so 10% of the declared value, then you're gonna pay the GST on 100 plus duties, which is $10. You pay the GST on $110. Also remember that anything must be declared in Canadian dollars. So if you are actually declaring a different currency, the custom will use the current exchange rate, convert in Canadian dollars the entire amount, and then apply duties and taxes. Overall, how can you actually identify the custom value, right? So how can I know if my product is $5, $10, $100? It's cost, because you're importing for commercial purposes as well. The most common, I would say, type of custom value evaluation is the transaction value, which may be difficult in this case because there's no transaction. You know, you produce ready and you are shipping to import for, let's say, commercial purposes, to store in a warehouse and then sell them locally. So there may not be a transaction, a real transaction where someone purchased those products from you. So in that case, there are like similar products, or it can be the cost. It really depends as well. But the most common one, the method, is the transaction method. There must be a contract, there must be a proof, let's say an invoice, or a proof of the costs. And that's how you're going to use basically the cost value. You need to have some proofs. Let's say a transaction, which doesn't have to be a purchase transaction, it can be even a contract. Another thing, when you declare at customs the value of your goods, right, and you go for the transaction value, for example, you must keep the records up to 6 years. Don't trash contracts, don't trash invoices or any purchase data that you have from your customers, even if you're talking about commercial purposes here, but overall, don't trash them for 6 years. Well, if it was for personal use, then you should also consider the thresholds of 20 Canadian dollars or 40 if it's coming from US or Mexico, the shipping. Also for taxes, and 150 Canadian dollars for duties, but this doesn't really apply when you're importing for commercial purposes, so we're gonna skip that part and we're gonna talk about it in the next video on how to ship to Canada, how to import to Canada for personal use, which means from an e-commerce store to a final customer. Instead, we talk about formal and informal clearance, which is still something quite let's say applicable to your case if you're thinking to import into Canada. We have, so in Canada, I'm not gonna be too specific here, otherwise it will never end, but let's call it formal and informal clearance. So anything below 3,300 Canadian dollars worth of goods of declared value, anything below, it's considered as informal clearance. Anything above that value, let's say 5,000 Canadian dollars, that's going to be considered formal clearance. Now, what happens if you have a value above or below? And what is formal and informal clearance? Well, formal clearance means it's a little bit more strict, actually quite strict, and a little bit more complicated compared to informal clearance, where you just provide a few documents and everything is good to go as long as you pay duties and taxes, basically. So let's talk about the documents needed for informal clearance. You just need an highway bill, you just need a commercial invoice. That's it. The declaration, basically. Once they assess duties and taxes, they're going to ask you to pay, and after that, well, pretty much all done. Nothing much to do. Parcel is going to get delivered. But if it's above 3,300 Canadian dollars, it's where the formal clearance comes into picture. And this means you don't only need an highway bill, you don't only need a commercial invoice, you also need a license, an import permit. You may need a broker, most likely need a broker, because that's going to be a little bit messed up. At the clearance, there's more documentations to handle. And you also need most likely a certificate of origin. Also remember, even if you're importing, for example, you have a warehouse in Ontario and you have a specific percentage in the provincial tax, when you move and you sell to your customers into another province, it's where you still need to pay the province tax. So don't just think about, oh, my province doesn't have any provincial tax, it's 0%, so I just need to pay the GST 5% at import. Well, don't think about it. You still need to pay, you still need to charge PST, the provincial tax, when you ship to your final customers from your province in Canada, where you have the warehouse, to their province. So still taxes to pay, unfortunately, even if you have zero into your province. Well, that's all for today. Thanks for watching. If you enjoyed this video, please make sure you leave a like and a comment. Also, let me know if you have any questions so we can address them in the next video, even if it's gonna be for, let's say, imports into Canada for personal use. Again, thanks for watching. Don't forget to subscribe to the channel. See you in the next video.